Now let's get across what the charts are telling us with Tony Sycamore from IG. I might flip things around and start then with what we're seeing in the Aussie, because above 65 cents, Tony.
Absolutely. Its first excursion above 65 cents since the start of December last year. And the tailwinds for the Aussie are becoming increasingly supportive in terms of the US dollar still remains on the outer due to the uncertainty with regards to tariffs and whether the US economy will go into recession or not. But additionally, the fact that, as you mentioned, there's now talk of talks taking place between China and Scott Bessent. And of course, the easing in policy in China this morning provides another tailwind. So all in all, I love what I'm seeing in the Aussie chart. We've spoken about it before. There is a V-shaped bottom in the Aussie dollar at that 59.14 low. These V-shaped bottoms are often very good indicators of medium-term lows. And furthermore, we are seeing it move above the 200-day moving average. So in terms of what that means, it is significant because a lot of model and momentum trading accounts watch that 200-day moving average, particularly in the currency space. So given the fact that the Aussie dollar is consolidating and building on that move above the 200-day moving average, that's a good sign that we're going to see a further wave of buying come through. And where I see it going is up towards the 200-week moving average, which comes in around 67.70. So things look great for the Aussie right here, right now. And I think it can continue to move higher.
Yeah, and we should just still reiterate that they're saying that they'll cut the triple R by 50 basis points. All right, what does all of that mean then for positivity? We are seeing a good day on the local market on the ASX 200.
Incredibly resilient, the ASX 200, and because of the rebound in S&P futures this morning after that news, which came out after the close that Scott Bessent was going to be talking to the Chinese representatives, the ASX 200 is now up and back above its 200-day moving average, which was around 81.40-ish. So things are looking good for the Aussie at this point of time. I mean, there's a lot of optimism, a lot of hope built in these markets. I often note that May is a volatile period. The fact that it doesn't necessarily close lower is certainly a point which people will point out. But generally, you see around a 3 to 5% pullback in the ASX 200 during May. So what I think is likely to happen over the next 4 weeks as we wait for these trade deals, as we wait for this 90-day pause to expire, I'm looking for about 2 months of trading sideways. People forget that we don't just have to be making new highs. We don't have to be making new lows. Markets can go sideways within a generous range. And that's what I'm looking for. Something between 82.50 down towards 77.50 on the downside for the ASX 200, but broadly in a consolidation pattern and trading sideways.
All right, let's go back then to what we saw with the overall momentum in US markets. And of course, this came before we heard this positivity that there could be some trade talks. But what is the NASDAQ telling you when it's below that 18,000 point level?
Well, I look at the NASDAQ 100, so that's the composite you're referring to, but this chart here is the NASDAQ 100. And for me, the big level is that 200-day moving average again. And the NASDAQ hit it to the pip 3 nights ago, and it obviously is stalled. Now, whether that stall turns into a reversal or not, I guess will come with regards to positive news flow coming around these trade headlines. But while it holds below that 200-day moving average, my view is you've got to probably say the rally is got a lot of good news baked into it already, and there's room for a rotation lower. So really watching that 200-day moving average very, very closely for the NASDAQ. And I think whether it can remain below there or get above there will tell the story where it goes next.
Okay, when it comes to the overall commodity market, I mean, huge moves coming through in Brent, up by some 3% overnight. So signs of higher demand in Europe here too, but what are we seeing in terms of whether or not that continues?
Yeah, well, signs of higher demand in Europe, some geopolitical tensions as Israel talks about entering Gaza, and the fact that it held that support around $55.12, the low we struck in April. So if you were short, and I think there was good reason to be short as it rallied back up towards the mid 65s, we spoke about it being such an important resistance level and that it would retest the lows that we saw in April. Well, it has done that. Now, if you were short and you didn't get the follow through that you were hoping for into the low 50s, you're probably thinking at this point of time, it's not a bad time to cover shorts. That's exactly what I'm thinking. You could see another rotation back up towards $65. And then you can look at it potentially shorting it, because at the end of the day, we've still got this uncertainty around tariffs, but a good chunk of the downside that I was looking for has played out and it has stalled. So time to be a little bit careful with crude oil.
All right, time to be careful. Gold, though, I mean, this is incredible, this rally. 3,500 in the side.
Yeah, I mean, look, we had a blow-off high up towards 3,500. It went parabolic and we thought we'd get a pullback. The pullback hasn't probably come far enough back that I would have liked to see back towards 3150. But look, the move the past 2 days, it does suggest that the pullback from the 3500 high was a correction. And with everything that's going on in the world, the uncertainty, the geopolitical tensions, the fact that the US dollar remains under pressure, it suggests that gold will break above that 3500 high and head up towards 3750.
And digital gold?
Digital gold strangely becalmed at the moment, but it had another dip down towards the 93,000 support area overnight, held, and now we find ourselves supported by that positive news flow which came out after the close. So for me, the picture looks really, really positive for Bitcoin, and I'm just looking for, I guess we'll start to ring the bell again when it gets back above 100,000, but to me, it's not that far away. Consolidating the gains, it's had 4 up weeks in a row, consolidating those gains, building some momentum ready for the next leg high.